Let's start with the market. Finally, we see a rebound after 5 days. Everyone has been talking about profit taking. Some are saying perhaps factors relating to the higher interest environment that people are anticipating. What's your take on what we're seeing?
My take is basically it's not unexpected what we've seen. Had a very aggressive bullish start to the year. And I mean, the time had to come for people to take profits and just sort of sit on the sidelines. That happened for about 5 days, like you said, and slowly I think people are coming back to the market.
And let's look at some news flow. A few days ago, we saw that CDMA operators were calling for a bailout, and the telecom authorities are saying that there will be no bailout for the CDMA players. What exactly are the issues there? What are they dealing with?
Well, I mean, the CDMA market is one that's been pretty disappointing over the past couple years, the past few years. And sort of three major things affect them in that space. One is sort of very low penetration for most of the major players in there. The second thing is access to finance and to funding. It's been pretty tough for them. And the third thing is sort of that they're just crowded out by sort of the bigger boys. I mean, so if you look at sort of the MTNs and the Globalcoms of the world, that's dominating that market pretty much. The big player in the CDMA market is Starcoms. Unfortunately, Starcoms, since it listed in 2008, really hasn't even earned any profit. So it's a pretty challenging market.
Very disappointing performer there, Starcoms. But what's the way forward for the CDMA players? A player like Starcom, for instance, we know is quite diversified. It's invested quite a bit on the data side. It's penetrated the market a little bit.
Correct.
Would you say that's the way forward for most CDMA players? Because it's very the likes of Zoom, Multilinks, they've really found it difficult very difficult in the market.
Correct. I mean, I think the one good thing for that space is the fact that if you look at sort of the general macroeconomic picture in Nigeria, it's pretty positive. That's one. So, I mean, there's a lot of growth expected in that space. Telecoms grew about 35% roughly last year alone. So that's good. If you also sort of look at the consumer consumption rate in Nigeria, this telecom space is a good measure for that. That's looking good. So if you sort of ask what these guys need to do, they need to be a little more aggressive in my view. Need to just change strategy around a little bit and perhaps think about partnering with some of the bigger players.
Let's look at AMCON. Obviously, there has been some delay with the bond issuance. The banks have exchanged those non-performing loans for what have been called consideration bonds. But the actual bond issuance, we hear it's a bit delayed because of some regulatory issues. But let's look at the impact it has had on the banks, particularly the ratios. How are things looking now that banks have bought into this AMCON deal?
I mean, it's good. It's the simple one-word answer for it. Intercontinental Bank CEO was on record about yesterday, I think, just sort of going through his bank's figures and what AMCON has done to their capital, and it's just amazingly good stories. So that's good on one hand. The other sort of good signal I saw is, I mean, by the time they announced this postponement on the 500 billion extra of the zero-coupon bonds, I thought that would hit the market severely, but that didn't really happen. So what that tells me is sort of the market believes this story. The market sort of sees growth and sees a new life in this banking space, which is absolutely good for the stock market.
And then, of course, let's go to the banks that are listed and the impact it will have on their equity. The rescued banks, some opinions are divided, although the majority say that there is no value, at least you as an equity investor going into those banks. What's your take on that?
I mean, I kind of share the view that there really isn't that much value in that space, and there's a lot of risk in that space. So, I mean, if you think about the fact that by the time new investors are coming in to take over these banks, odds are that there'll be significant dilution in some of these rescued banks, which, I mean, it's a lot of risk. That's one. Number two is no one really knows how this is going to play out. And so what's the point putting your money into something you can't really wrap your arms around? That's the one thing. And so what we really advise at this point is really cut your losses in some of these rescued banks and reposition yourself properly.
To sell on the rally.
Exactly,
that we're seeing.
Pretty much.
What about the cleared banks, tier 2 banks in particular? What's your take on how this would impact on them? We do know that 2009 was a year of huge provisions for the sector, less so expected in 2010.
Correct.
But going forward, especially with the deal with AMCON, we think that the coast is clear for these banks. What's your take on how you rate the tier 2 banks in the light of the AMCON deal?
Good question. I mean, we particularly like one or two tier 2 banks. Diamond Bank is one that we're very, very bullish about. Fidelity Bank is another one. And the story there really is just playing on some of the positive things we see coming up in the economy. If AMCON clears things like they're supposed to, if the whole political climate goes unsuccessful like we all hope, then we expect to see a lot of lending and a lot of, oil in the wheels, as it were, for these banks. And these two banks, we think, would benefit aggressively from that. Diamond Bank, severely hit in the market because of its several quarters of negative write-downs. Fidelity sort of hit itself because it's sort of overcapitalized in some sense. So these are two names that we sort of have our eyes on.